Well, at Consumer Electronics Show CES Las Vegas 2025, the future of technology and business are on full display. One of the standout conversations I've had over here is with none other than Sir Martin Sorrell. He's telling me
Always stand out, Shimon.
always stand out. It's always a standout conversation. Yes, and we are so used to catching up at Cannes, and then over the past couple of years, we are meeting here at Consumer Electronics Show. I have seen how more and more agencies and marketers are present at CES. Since I'm meeting up with you right here in the first month of 2025, tell us, what are some of the trends that you're picking up? Where is the advertising business? Where is the marketing business headed?
Well, I think it's still, there's a big question mark about not the impact of AI, but the implementation of it. So we certainly 2 years ago, where I don't know whether we did a session 2 years ago, but if we had have done it, we would have been saying, wow.
Yeah.
And last year we probably said, how?
Yeah.
NVIDIA were saying, how do we do it? As we're building out all this capacity, not just NVIDIA, but Google and Meta and Amazon and everybody, and Microsoft and Apple and everybody else. And now it's really about now.
Now. Wow, how and now.
Well, how now? And how do we get this going at scale? I mean, I think the biggest example that we've seen is General Motors.
Yeah.
And I think that's probably industrially the biggest thing that we've seen.
Sure.
So it's how does... a lot of clients are looking at what is the marketing system, the marketing model of the future.
Sure.
But very few people have had the courage or conviction or abilities as yet to provide it. So you're seeing a lot of workshops, you're seeing a lot of audits, a lot of tests, a lot of experiments, but very few people really jumping in with both feet. And given the scale of the investment that's being made, Google is spending about $15 billion a quarter. Amazon probably about $100 billion a year on building out capital, on capital expenditure and building out capacity. I think Meta is probably around about 40, 50 a year.
Yeah.
So we're talking like huge investments. So they've been switching OpEx.
Yeah.
Some marketing spend,
yeah,
from OpEx to capital expenditure. So I think it's really, Shivani, about really grasping the nettle and jumping in. There was just really one client that we were pitching to. He was saying that there's a lot of internal resistance to changing the way that people, in this case, were doing copywriting and the like. So it's a question about, if people are worried about their jobs, they're worried about the impact of automation on their jobs, which is not a new phenomenon. It's been going around for years, as to whether all these waves of technology, whether it's smartphones, whether it's the internet, whatever it happens to be, and this is another industrial revolution at huge scale with huge impact, impacting everything, whether it's going to have an impact on the world.
But do you feel it will push creativity further, or
it's
simply automate?
It's going to increase the volume dramatically, and therefore it's going to have a premium on creativity. I mean, it made the distinction between creative and creativity. And, what we do, it may be true that it becomes more cluttered.
Sure.
That there are more assets, so that we're being bombarded with more. But that means that creating a difference with that human element may actually become more important. So this fear about, one of the founders of DeepMind resigned because he was worried about the existential threat of AI or AGI.
Yeah.
It may be that is overblown, because it may be that we work in a world which is so competitive, and so cluttered, that particularly in our industry, that creating the difference becomes even more important.
Yeah.
And clients will pay an even bigger premium to that.
Yeah. With the rise of AI, and we have seen mostly the conversations around marketing and AI, is what are the kind of personalized solutions that we can get to the customers. So in this age, do you think sooner or later are we heading towards privacy crisis where, like there is so much of data, consumer data that we are gaining?
I don't think so, as long as we make it clear to the consumer what he or she is letting themselves in for. Sure. I mean, when was the last time you said, I'm not going to accept something, or I reject, a passage to a site? So it's just not, I mean, if you read the legal agreement,
Nobody
we can AI it now.
Yeah.
But
nobody really goes wrong.
They're just going to do it.
Yeah, and I just click accept whenever it comes up.
That's right. But the important thing is to make sure the consumers understand what they're letting themselves in for. Then I think you get over that hurdle. But if they do it blind, figuratively, if they do it blind, you have a problem. So it's really educating the consumer to what they're doing. We've seen this pivot by Meta, by Mark Zuckerberg in relation to the new administration, Trump 2, let's call it. Yeah. And they're calling it not the Mag 7 now. CNBC are calling it the MAGA 7. Amazon and Meta were both pivoted quite openly to the new administration. That's an example of, we're seeing more freedom in terms of content. Yeah. A lot of journalists are interested as to whether that's going to have an impact on advertising on Meta. Yeah. I think at the end of the day, it depends on each individual case. Sure. CMOs don't like their CEOs calling them and saying, why are we advertising next to this horrendous content? So that issue is still there, despite what Meta is doing and what Mark Zuckerberg says. So it may impact some clients, may not impact others. Sure. There are also other things happening in the digital ecosystem around TikTok as well. It's not so much about privacy there, but it's whether TikTok is an arm of the Chinese government or not. Yeah. My bet would be that probably it'll get closed down, which will knock off about 20 billion of revenue for ByteDance out of 150. So it's not existential. But what will happen is the Chinese, just like with Huawei and with EVs, will look at other markets, and move away from dependence, on the American market, because America's 28 trillion, China's 18, so it's 46 out of 106. There's another 60 trillion that should be around the world. BRICS, next 11, Global South, which is where I think the Chinese will put their effort.
Yeah. So now let's move away from CES and let's speak about what's happening in the larger advertising and marketing ecosystem.
Is there anything happening?
IPG, Omnicom.
Oh, well, look at us huddling together.
Yes, like us huddling together in front of the camera.
Yes, in the camera. We're huddling together again. It's not cold here in Las Vegas.
Yes, but you were in the front seat when, the Publicis Omnicom deal was.
Well, I call this one the OI merger, because it's OI, Omnicom Interpublic.
What will it change, according to you?
Well, 6 becomes 5 if it happens. I mean, the share prices are signaling that shareholders are not happy with it, because the Omnicom share price is off about 20% from its pre-deal announcement. And IPG is actually, very unusually, IPG's price, and there is no premium. So discount now. IPG is selling for less now than it did before. Look, if it goes through, and I think there is some doubt, then we'll see. 6 goes to 5. If 6 goes to 5, that clients moving from one agency to another at lower prices, people moving from one agency to another at higher prices, that compression, that might be signaling that. I mean, IPG was in trouble. They lost GM, they lost Coke, Verizon, Microsoft, Amazon, J&J, Pfizer. I mean, they lost huge amounts of visits. No journalist actually figured out, or analyst, how much revenue, and it had not bled through into the results. So Omnicom has actually taken on board, has given them 40% of the merged company without really taking into account what may or may not happen in 2025, but they preempted that. So interesting move. But I think John Rand looked at it. All these deals have a personal element to it. John Rand is 71. Bruce Crawford lasted as chairman of Omnicom until he was 92. You included, no journalist, analyst pointed that out. Quite remarkable. So John's got 22 years to go. But he may have wanted to go out with a bang from CEO to chairman. So I think the allure of being number one, particularly when Arthur Sadoun had ordered 80,000 T-shirts where he said, Snoop Dogg, asterisk saying top dog. Those are now on the scrap heap. So I'm serious. I think that was maybe the straw that broke the camel's back there. Yeah. They've been talking apparently for a couple of years about doing it together. Krukowski, I think, was quite smart. Yeah. I mean, he lost all that business. The GM and Coke loss opened up the car and soft drink category. So, Omnicom has Pepsi and they Waterloo together. So it actually made it possible. In fact, that loss, the irony is that the loss made it possible. But I think Krukowski was up the creek without a paddle, so to speak. So he's done a good deal for his shareholders, I think, so far. The other thing, of course, is I think the good thing about it is it gives them 57% of their overall company in the US at a time when Trump, is on a run. I've never seen America so bullish since Ronald Reagan, really. So I think we'll see whether it works out, because there is a lot of volatility, but having a strong American business is good. But beyond that, I'm not sure I'm convinced the media brands gets a bit more volume. I don't buy the Axiom or the flywheel arguments. I think Omnicom, are better subtle managers. When Slan destroy brands, WPP has now destroyed JWT, AKQA.
With consolidation.
It breaks everybody's heart when you see that. But Omnicom have done it much more subtly. With Omnicom Advertising Group, they'll plug in Mullen Lowe and FCB and McKenzie to that. But do they really need it? Is another thing. I mean, they've got very strong agencies. From what I pick up, is a number of Omnicom people feel the question whether that makes sense. It's an Omnicom takeover of IPG. I think the IPG management will disappear. They're talking about synergies of 750 million, which is probably about 7,500 people out of a workforce of 127,500. 750 million is about 3.5% of the combined cost of base. They should be able to get that investment property. So I think that they've deliberately targeted the synergies, and I think there's probably, I would say, 1.5 billion on the combined cost base, which would be about 7% of costs. I think 10% of costs is probably the right figure. So they'll probably be about 15,000 job losses, somewhere between 12.
And IPG management will disappear, is what you are saying.
I think it's become a regular trough, and they are the stronger breed. I mean, they do run their business well.
What will be the impact on WPP since
well, the WPP, are up the creek without the paddle. Where IPG could have gone. But you've got 6 going to 5. You've got WPP at number 3. Publicis is rapid at the minute under Arthur Sadoun's leadership. Despite having cancer like myself and having to deal with Maurice Levy like myself, Arthur's done a very good. I mean, Arthur and Maurice have done a very good job. So they are the strongest in the minute. Omnicom closely behind them, although I think this deal is going to take time to implement, take 2 or 3 years to implement. Then WPP will be a distant third. It's a remarkable difference. I mean, Publicis capitalized 25 billion euros, WPP now $10 billion. So there's a huge gap now. So WPP have an issue. Dentsu has an issue. The business outside Japan is really ailing. Whether they will have the stomach to offload it is another question, because Japanese don't like to lose face. Havas is sub-square. Stick out. So Havas has to do something. So I think when you look at, there's probably, it is the catalyst for more change. WPP's share price has been extremely soft recently in the last few days. And there's lots of rumors flying around about what may or may not happen at WPP. Brian Lesser is back at WPP running Group M. He's very strong.
So do you think we are entering an era of monopolies now with this merger? With
Monopoly means 100% market share, so it's not monopoly, no. No, I think there's
controlling the majority share of the advertising.
there's an oligopoly. I mean, but there will be room for the independents. See, it'll open up. I mean, the consolidation of Omnicom and IPG, however well they manage it, is going to throw out people and throw out clients. So there will be opportunity, as everybody said. So Sadhu said it, Mark Reed said it, everybody said it. The vast management, Yanni Oroya said it. I don't think the Japanese have said it as yet. Probably too polite. But no, there will be opportunity. But no, not monopoly. There will be. I think 5 could go to 4. I think 4 could go to 3 big ones. I think beyond that, it's probably difficult from a regulatory point.
But do you think it will suffocate innovation with already so much of the, as the market is asking for more out of it?
There's always every room for people to
innovate.
I mean, it's different views make a market. So, at one end, Coca-Cola doing it one way, the marketing model of the future, and the other end, you have General Motors. So, there's room for everybody.
So, Martin, with so much of consolidation happening in advertising and media industry, how do you differentiate Esport Capital's offering to stand out in
a world
in this market?
It's brain power, not volume. I mean, in a digital, people forget there's $1 trillion of spend last year. 700 billion is digital, 300 billion is traditional. As you know, traditional is shrinking. If you don't have live sport, you don't have the IPL, you go backwards even further. The digital rights to IPL, you do better. But of that 700 billion in digital, Google, or of the total of $1 trillion, Google's 250, Meta's 150, Amazon's 60, and TikTok outside China is 40. So those 4 are 50% of the market, 70% of digital, just under 70% of digital. So it's got become much more concentrated from the media point of view. I don't think CMO's jobs got more difficult, I think got easier. The agents like helmets got more difficult because that makes them, gives them the ability to charge more, or say they charge more. But I think actually it's not super. Yeah. So, digital is dominant. And the 4 characteristics of S4 and Monks is digital first or only. Well, that's even more relevant today. When we started 6 years ago, it was 50, 55%. It's now 70%. And it will go up to 80, 85, 90. Secondly, we're data-driven, and in AI age, data has become the fuel. Sure. Thirdly, faster, better, cheaper. There's an argument as to who invented that. Well, actually, if you go to Gemini 2, you find that it was invented in NASA in the 1990s. So nobody can claim authorship of it. And then last but not least, unitary brand. So when you see Publicis Power One, Omnicom and IPG are going to slowly consolidate. The back office will be one platform. The front office might have different
faces, different agency faces.
Yeah, and I think, to be fair to Omnicom, they manage their business very well. I mean, I don't think they have a strategy, but they manage their business very well.
All right. Tell us about your outlook for this particular year, for Esport Capital, for the industry.
So I think tech companies which dominate our client list certainly shifted from OPEX to CAPEX. That may be continuing, but maybe not quite as vigorously as before. So there'll be a shift back. But the digital platforms can continue to grow. There's big opportunities still. Clients priced up with inflation. There's going to be less flexibility on that. I mean, inflation is stickier than we thought it was going to be. That's why interest rates are not coming down as less we predicted, and markets wobble when that happens. But I would say, look, the prospects for 25 probably is more stability in the tech sector than there has been. But it's not dissimilar to 24, maybe a little bit better. But the world's going to be very volatile. So I think US, China, bifurcation, Russia emboldened by a deal of some sorts around Ukraine. And maybe the Middle East gets better as the Saudis and the Americans work out a deal with Israel, and maybe Iranian influence is less as a result. So, but the world is going to be volatile. So you have to pick your job. If it's India is one of the jobs because they'll be all big.
And you have been always bullish about it.
I mean, hugely bullish. I mean, you know, there has been. I mean, Prime Minister Modi did get a bit of a shock, I think, in that election, but in the recent state elections, he's done much better than that. And you know, he's been great for brand India, and the Adani issue gained some PR interest. Seems to die down a bit from my sense, and maybe the relationships between Modi and Trump and Adani as a result with the regulator or whoever is sufficiently good to deal with that. But you know, that raised a few eyebrows. But India is strong, and I remain extremely bullish. I mean, in an Asian context, if people do have worries about China being too big in China because of the Taiwan risk, India is the alternative, if you like, along with Vietnam and Indonesia and Thailand and Philippines and Singapore and Malaysia, etc. So, no, I think the region is in good shape. I think Middle East is a big opportunity, Latin America and North America. Europe is the issue. You know, France, Germany, UK have got trouble, political and economic trouble. Italy and Spain were maybe a little bit better. But in those parts of the world, which are not where clients will be focused from a growth point of view, they're taking out cost. AI and technology, because it's important everywhere because the world is not growing as fast as it used to. Inflation's higher, interest rates are higher, so it's more difficult. But you pick your job, so that's number one.
Yeah.
And number two, you're more efficient in a slow growth world.
I heard one report which said that India leads when it comes to upskilling with AI, the enthusiasm around AI. You know, we are very excited about tech. We are very excited about AIs, what was released at CES. But if I were to ask you, what is that one thing that you want to go back with from CES that would probably shape your strategy, shape your focus for S4 Capital going forward?
Well, I think you all these technological waves, whether it's the internet or smartphones or whatever, you always underestimate, I think, you know, particularly if you're an incumbent, the impact. So I was very struck by Sundar, the CEO of Google, who said, you know, when an analyst said, "Aren't you spending too much on CapEx?" You always underestimate. And he actually said, "I'd rather overspend than underspend." That he's right. So I do overcorrect. I mean, when you think about it, you know, our industry reflects what all these mega cap companies have done. You know, the most valuable companies on the planet, like Apple, like Nvidia, like Google. Yeah, $2.5 trillion now. Meta, $1.5 trillion. I mean, extraordinary. All these $1 trillion companies, Tesla, SpaceX, are reflective of what goes on in our industry. We don't have the same, sadly, we don't have the same characteristics, but we're a reflection.
Yeah.
You know, we reflect what's happening. So, you know, I think that when you look at CES, where there's flying cars, you know, helicopter cars or robotic tractors, and Gulf of Mexico, the Panama Canal, the Canada, the Disney one's first day. I mean, all that is volatile. But at the same time, look at all the advances that are being made. And India is a fantastic cockpit for that.
Mm-hmm. Absolutely. Some of the innovations that, you know, we get to see here at CES is something that we have seen in movies.
Yeah, but the trouble...
Like a couple of years ago. And it's actually happening right now.
The trouble is we say in conference rooms like this, we don't go out to the conference floor.
I do. Well, thank you so much. Lovely speaking to you, as always. With that, it's a wrap. Goodbye.